Best swing trading strategy for absolute beginners in the stock market. Hey guys, and welcome back to an exclusively new video on my channel Tradingfyive. In this video, we are going to talk about a very powerful strategy. In fact, a trading strategy which is specially designed for swing trading in the stock market. I have been using this strategy for many years and I have got absolutely good results. And today in this video, I am going to share you this strategy in detail. You see, this strategy basically requires a knowledge of price action along with the indicator moving average. Now, price action means the movement which is made by the market by the price of the stock. And if you have spent at least some time in the stock market learning technical analysis, then I am sure that you must have some knowledge about price action. And when it comes to moving average, I have made a complete playlist wherein I have explained about moving average in detail, that how can you use moving average, how can you find support and resistance on it, what are the various combinations of using it, everything in that playlist. The link will be flashing above, or you can check out the description and watch it later. Alright, so let's start with this video, but before starting, please take a minute to subscribe to this channel and press the notification bell, so that you won't miss upcoming videos or updates on stock market and technical analysis, and as well as this gesture of yours will motivate me to make more such videos on stock market and trading. Alright, so let's start with this video. Now as you can see on the screen, there is a chart along with a black color line which is the 20 SMA. Now 20 SMA means 20 days simple moving average. That's right, we are going to use the 20 SMA and price action to find some good trades in the market. Now remember that you have to use this strategy only when the market is trended. It can be uptrend or down, doesn't matter, but the market does not have to be in a sideways. It does not work when the market is sideways, and so I suggest you to avoid using this strategy in a sideways market. Now in an uptrend, when the price takes a support on the 20 SMA line, that is where exactly we have to enter into the trade. You see, in this area, we have to look for some price action, some candlestick patterns that will indicate us a bullish reversal in the market. Now when you get a bullish candlestick pattern along with the support on 20 SMA in an uptrend, it becomes a deadly combination. So we simply buy here and you can make really good profit after you punch in this trade using this strategy. So it is simple. Support on the 20 SMA along with candlestick pattern indicating bullish reversal. We are gonna buy the stock. And similar thing can be done when the price is taking a resistance on 20 SMA. At that time, we will look for bearish reversal patterns over the resistance area and we can make a short trade over there. But for that, the market has to be in a downtrend. So let me quickly show you some trades that I have made on this strategy. So as you can see on the screen, this is the daily chart of Tata Motors stock. And you can see the price is in a good uptrend. Now this is where the price first takes a support on the moving average. And we can even see a hammer candle followed by a green candle which indicates a bullish reversal in the market. So this is exactly where we are going to buy the stock after we get a proper confirmation on the 20 SMA support. And we are going to place a stop loss below the swing low. And after that, it is really simple. You just have to trail your stop loss and keep securing your profit. Or what you can do is you can use this 20 moving average as a dynamic stop loss. That is, when the price breaks this 20 SMA, you will exit the trade. Now you see, in this stock itself, we can re-enter again when the price takes a support on 20 SMA over here. And over here, we even have a previous support along with pin bar candlestick pattern and also a support on the 20 SMA. So it becomes like a triple confirmation in the market. So it is obvious that we are going to buy the stock after this candle is formed and our stop loss will be below the support that is near the swing low. So in this way, we enter 2 times into this stock with a simple low risk trading strategy. And you can see a good amount of profit can be generated out of this trade. And now I say that this strategy is used for swing trading, but you can even convert these trades into positional, where you're holding the stock for longer duration and gaining more profit in the market. Now let us look at some another example. And as you can see on the screen, this is the daily chart of Bajaj Auto, which is in a quite good uptrend. And this is where exactly the price takes a support on the 20 SMA. So the step 1 is completed, that is locate the support on 20 SMA. And the step 2 is to look for a candlestick pattern, a good bullish reversal pattern. And in this case, it is the bull sash pattern. So again, a good combination, and we bought this stock and our stop loss was below the swing low. So this is like a low risk entry, but the return that you can make from this trade is fabulous. And if in case you notice carefully, we again have a support on the moving average exactly over here. And this time it is the morning star pattern, on which I have made my recent video. You can check that out. So again, buy at the closing of this candle and stop loss below the swing low. And a really outstanding trade can be made over here. And that is what I meant when I say this is a really powerful strategy if you implement it correctly. Now let me show you some another example in downtrend. That is how you are going to use this strategy when the market is moving down. So as you can see on the screen, there is a chart which is in downtrend, and we are going to take a short entry over here where the price takes a resistance on the 20 SMA. And you can even notice we had a doji candle before it which tells us a reversal in the market, and the next red candle even confirms the doji. So this will simply tell us that the market is going to go in a downtrend. So we take a short entry and our stop loss will be above the swing high. And remember that most people don't use stop loss on this strategy, and let me tell you, this is a big mistake. You see, no strategy is 100% right in the market, and so it becomes really necessary that you use a stop loss while trading. Alright, so you can see we can even take a short entry over here, since the price is taking a resistance near the moving average. And such situation is kind of doubtful to trade because there are chances that the price may hit your stop loss. So if you are a complete beginner in the stock market and trading with a really small capital, I suggest you to avoid trading on such situations where the price is not taking a perfect support or a perfect resistance on the 20 SMA. But anyways, we made a trade over here, stop loss above the swing low, and this trade turned out to be in our favor, and we made a really good bunch of profit from this strategy. Now if you have watched this video up till here, you must have understand this strategy. But before trading in the live market, make sure that you do some back testing on this strategy. Start with some paper trades, get confidence on this strategy, and then enter the live market along with proper risk management. And if you have any doubts or suggestion, make sure that you type them in the comment box. Alright guys, so lastly, thank you for watching this video till the end. If you like the video, please hit the like button. Share this video to as many people as possible. And to not miss such many content on the stock market, technical analysis and trading, make sure that you subscribe to this channel and press the notification bell. I will see you in the next video.